Hello gang, it's Friday, July 11th. I wanted to give you a quick USDA report, cattle, and SDRP update for the weekend. We sent out my weekly report on Wednesday, so this will just have to be the supplement to that. So USDA launched their July WASDE today. Not a lot of surprises. It was considered friendly, so to speak. They increased demand on all three, increased export demand on corn, not enough, but a little bit. For example, we sold almost 1.3 million metric tons for old crop corn this last week, which would be, just 45 million bushels, and they increased exports by 25 million. We've already reached USDA's report estimate already. So anyway, nonetheless, they did drop feed usage a little bit, which probably makes sense. So, no big changes in USDA. We didn't expect them to change corn and soybean yields at this report. They'll probably do that next month. So, very weird price action today. We were higher overnight, and then all of a sudden the selling came in, and it was pattern selling, it was structured selling, which tells me it's a systematic selling that comes from funds or computers doing that. It's not human induced or human ran, so to speak. The selling continued until about 8:40 a.m. Pacific time, 10:40 Central, which 20 minutes before the report, and then everything bounced. The grains bounced. Wheat went positive. It went from -4 to about +2, +3, and then at 9 a.m., 11 a.m. Central, when the report released, we were up 2 at that moment in wheat. Within a few minutes, we were down 8, and so we had a 10-cent drop after a friendly report. And same with corn. Corn wasn't quite as dramatic as wheat. Same with soybeans. So very odd, very odd. I don't think it would have mattered what they released on the report today. We were going to have that structured selling all day. So we're in a strange time. These markets haven't done anything like I grew up learning for some time, and I think we're stuck with this pattern until something breaks. Unfortunately, it's the farmers that's getting broke at the moment, and what'll happen is you'll just end up with yields and acreage just so far below what is needed for the world, and you're going to have a major hiccup. We'll see what happens. I mean, the wheat balance sheet has been getting tighter every year for the last numerous years, and USDA's got a fairly inflated balance sheet this year, but those numbers are off. China didn't have a record crop this year, but they're posted as a record. Canada is not going to hit 36. I'm saying 29 is probably where that's going to be. And today they dropped Canada by 1, so they're down to 35 now, but they still got 6 to go to make sense. Anyway, and the Russian yields are not coming in quite as good, with a lot less spring wheat acres than expected. So that number is going to be really hard to get over that 83, 84 mark, which is right where USDA is. So there's not much upside there. So, moving on. So the cattle market. So we had a big gap open yesterday. Gapped up. We're up about $6. Partway through the session, the selling came in, moved that market down below unchanged, so it was negative. And then we still managed to bounce and barely close green. Had a good, strong day today. If you're following along with my position, if you recall, I had everybody take out. I recommended them take LRP out some time ago, with the theory that if we were able to put another $30 on this market, that would trigger us into buying some puts to ladder up or increase our LRP level. Well, we've managed to beat that now. We can increase our LRP by $25 a pound if we buy some puts now. So you cannot LRP the same cattle twice. So anyway, I think it's go time for that. It's a softer time of year. It's barbecue season starts to wane, unless you're at the KDI compound here, then barbecue season lasts all year. I have no problem with that. Nothing better than barbecuing in a snowbank, in my opinion. So it's a good opportunity. I mean, if the thing keeps going, great. But to me, it's a good spot to get some coverage. So let me know if you want to do that, or talk to your broker, whatever you want to do. Remember, I'm just, for the record, I am not a broker, so I am not pushing trades. I do not make money if someone does brokerage trades. I'm just, I have a CTA though, so I do have the right to talk about this. So moving on, SDRP. So that program is insurance-based program. The first, that thing came out in January with the idea, or it was passed in December with the idea that that would be a disaster program for growers and cover, any kind of natural disaster we had. The first thing you need to do is see if your county qualifies. This is for crop years 23 and 24. This program is not related to the ERP. If you've been following along with my stuff and reading it, then you're familiar with this program and what it is. But if you haven't been, then this might be something new. But it is a new program that launched yesterday. The one thing I want to make sure you know is if you go, you're either going to get the form mailed to you to sign up, or you can go into the office. You might call them first to see if they've already mailed it. If they have, it's just wait for it. But there's only two things you need on there. You need to sign it, and you need to clarify what the loss was from on your yield loss. Okay, why did you have the yield loss? And you got to be careful with that, because if you've got losses in both 23 and 24, I don't think you can use the same thing twice. So you need to clarify that with the FSA people. Okay, you have to use the right wording on that, or it'll kick you out. So be careful with that. That's important. But it's kind of funny when that report, or when the thought of that program came out and they started running some of the equations. I remember thinking, okay, this one has a good chance of actually helping us significantly. We had a very difficult crop in 23 in the Northwest. It depends where you were. I think it seemed like the Southern Plains did too. The Corn Belt was fine. They had a record yield that year. So, I don't know if they're going to qualify for much. But I remember thinking that this is going to be pretty healthy, because the theory was they would increase your RP level from what you bought up 15%. So if you bought 80%, you'd get moved to 95. They did have a max of 95, I believe. So that was the theory I ran under for a little bit. But then as the more time passed, people would continue to say, no, it's 7.5%, and then you're going to get a fraction of the 7.5%, a third of that. And so I went in there with the idea yesterday that be lucky to get $10,000 or $12,000 for our farm. And when I spoke to, they wanted me to come in. They just wanted me as a guinea pig to try and get some of the kinks out on their end. And they knew I wanted to know the equation so I could help you guys. So that's why I got to go in yesterday. Anyway, but that was the first day. So they were about ready to mail stuff out, but all the information's already in. Your insurance is in there, in their system, and like I say, you don't have to provide that. But yeah, make sure you clarify what the qualifying loss is from. That's going to be very important. But we came out of that with my original estimates being closer. So when I came out thinking I was going to get 12 grand, $10,000 or $12,000, we came out of that place, it's like, no, it's significantly more than that. So this is worth your time. So if you had a qualifying loss, it's definitely worth your time. So don't discard that when you get it in the mail. So there will be a round 2 of those payments if there's funding available. There's also an unqualified loss payment. I don't know the specifics on that. That'll come out this fall, which is just a couple months away. So if you don't have insurance, or you had a loss in a county that didn't count, then I think that's what the second program is for. And if there's funding available, you can move that factor up from the first payment, which was 35%, possibly up to 100%. We'll see. So That's all I got for now. Enjoy the weekend, and we'll be talking next week.